a disappointment yesterday. Even though we played for a rebound, the rebound did come for sure. But from there, we saw in the last half an hour of trade, the markets take a very sharp knee jerk, and that uptick clearly got sold into. It was across the board. It was not just one index alone, not just the Nifty or the Nifty Bank. You could see that profit taking being felt across the board in individual stocks within the Nifty, even the broader markets as well. In fact, the broader markets didn't quite do a whole lot as much as benchmark indexes. They were the ones which were languishing and underperforming relatively throughout the better part of yesterday's trading session. And it was no different when we closed in for trade, with the mid and the small cap indexes joining hands and closing in 0.5% lower or so. And that was pretty much the state of the broader end of the market, or the market breadth as well. But yeah, talk about the globe. That continues to be in a different spin altogether. And after that, big crack that you had a day before, it was a very, very sharp rebound, which actually lasted for the S&P 500 index, for the NASDAQ, a solid rebound coming in the tech stocks as well, which clearly drove Wall Street up. In fact, the US futures, though, this morning are a little bit on the tenterhook. They're flattish right now. All investors are waiting the Federal Reserve's interest rate decision that's tonight. The dollar index, that's continuing to hold steady. It's still around that 107 mark. So eased off definitely from those 108 elevated levels, but still holding steady. You've not seen much of a cool off really coming in there. So yeah, status quo continues. Our disconnect from what's happening in the US market, that continues to play out.
So Asha, for me, the headline is that the deep seek has not translated into a deep rout.
Yeah.
You had a bounce in AI stocks, you had a bounce in Nvidia, you had a bounce in some of the chip makers. So for me, this is important. Why? Because while it came as a surprise and as a shock in terms of news and in terms of impact on Tuesday, but thankfully we have a stable and a much calmer view of the world. What you don't want to see, you don't want to see the world getting compressed, or there are deep cuts in developed markets also, largely because of this entire deep seek or the AI adjustment. So frankly, the handover from US market is better. The best scenario for us is that US markets, they stop rising, but they don't fall much. And Indian markets, they stop falling and then they crawl back up. We'll talk about it. Second is Fed, and third is Trump. Well, White House has officially said that 1st of Feb is going to be the deadline. You will hear the final picture in terms of tariffs. So on budget day, which is on Saturday, that not only there is budget day, we will also hear from the US, from White House in terms of the tariff imposition. Fed, let's analyze that. They expect rates to hold steady. Potential timing of rate would be function of economy and data. And since Trump has returned, there is no new narrative in terms of the rate trajectory. So Fed is maintaining that, guys, we are independent, we will remain independent, and our probability would be data dependent. So even though it's the first Fed communication after the after the change of guard at White House, in terms of implications, I think we can safely ignore that. So that's the global setup, Aisha. And I think the Indian setup, what do you think?
I think the scare in the market with what's played out in the last 10 days is so much that just any bounce and you just want to profit take, or at least the temptation is pretty high, and that was pretty evident on the screen yesterday.
Aisha, the market has got divided, and if you really, let's say, are a large cap investor and you would say, look, I have exposure to the Nifty, the last 10 days have not been bad. They've not been great, but they've not been bad. And if you have exposure to small and mid cap stocks and micro cap stocks, in last 10 days have been pretty tough, brutal, and they've really shook the core of your portfolio. Last 10 sessions, the Nifty has changed by just 1%. Yep. So much has been happening in the mid cap space, so much is happening on the global front, so much has been happening on the local front, but indices are firm. Yesterday's intraday, and look at the classic market, very, very classic, how the leadership in the market seems to be migrating, where outperformance is coming in, where underperformance seems to be coming in. And if one really looks at the outperformance and the underperformance, there is definitely an evidence of buying in large cap, banks are showing signs of leadership, and this is the market way of saying that the store of value now, or the preferred asset class now, or the preferred market pocket now would be large cap stocks. So you had all classics of what could be called as a leadership emerging in banks, a drift from small cap to large cap, and a clear outperformance which is now happening in large cap. So large cap becomes, whether you call it the port of call, you call it the choice of asset allocation, or sheer underperformance which is catching up. But we are staring at two parallel markets, and I think this may just only multiply and accelerate in terms of a trend where small cap goes down, 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 large caps gradually start crawling up and up, and that great divide I think will get more and more pronounced going forward.
Yeah, and it already seems to be playing out that way, wherein it's the large caps, wherein people are finding the safe haven as opposed to mid and small caps, which continue to underperform. And as earnings progress, you will see perhaps more pain being felt in that pocket, overheated as it may have been before we stepped into the earnings season. And fresh buying clearly seems to be emerging and continuing so within the large caps, and there's a clear disconnect over there. But a lot of earnings as well today. You've got Bajaj Finance, wherein one is expecting mild asset quality deterioration perhaps, but given the kind of stock movement that you've seen, the fact that it's been so light for the last 1 year or so, and finally you're seeing some buying kick in for Bajaj Finance, is going to be quite critical to look out for. And then the underperforming lot, Tata Motors, one is expecting largely stable margins there. And then Maruti as well, wherein perhaps discounts are going to offset the operating leverage for them. So important day of earnings.
Yeah, so you first want to say that, okay, what came out yesterday? I think Bajaj Auto came out yesterday. And what I like about Bajaj Auto numbers is that EV is now accounting for 22% of the domestic turnover. 22% of the turnover for a company which came out like, Rajiv Bajaj was always in this denial mode, that famous point which he made, oats. Yeah. Champions eat oats for breakfast. We'll never move into EV. But then you realize the customer wants EV. He came into EV and he's managed to make it 25% of the total business. And he's not a weak number 2 or a number 3. He's like really strong there in terms of what he's done. So these are good set of numbers. In line, when it comes to top line, 7-8% growth. The stock I think has corrected. Bajaj Auto, please. You're not talking Tata Motors. Tata Motors baad mein aayega. And that is Bajaj Finance. Okay, pardon us. Little bit of bug in the system, if I may say so. So these are good set of numbers. Not too many upgrades, not too many downgrades. But these numbers pretty much tell you that the trajectory for Bajaj Auto is now going to be decent in terms of what they're doing in terms of EV. And frankly, whatever they'd indicated in terms of the sluggishness which everyone thought in the two-wheeler space was coming, I think that is not bad at all. So these are numbers which are in line with the marginal positive, and with the real underlying appeal for me is the EV business. And as things progressively get better, I think the export engine, because of the currency advantage, would also be very decent. Then there is Bajaj Finance, and this is a classic. You know what Bajaj Finance has done in terms of lending. You know what the quarterly numbers from Bajaj Finance would look like, because you have got that quarterly update right at the beginning of the month. So in terms of a surprise, the surprise may not be that large, but are we reaching that turn where Bajaj Finance, looking at the compulsion of the market, which is that large cap stocks are up, liquidity is coming back, it's a stock which has been 3-4 years, it has done nothing. Could Bajaj Auto really get a leg up because of this, positioning of the market? So for me, that is the important one, which is that if numbers are marginally better, I expect the outperformance which Bajaj Finance has suddenly registered in last couple of days, that would be real. In terms of the growth of AUM, credit, I think all that is out in the open, because they've already shared that when they indicated or informed exchanges about the quarterly performance right at the beginning of the month.
If you like this video, then like, share and subscribe to ET Now.